Welcome back to Dukascope TV. I'm Darren McDermott. I have Bruno Estier in the studio with me today to have a look at the interaction of the US dollar index on European equities. Bruno, welcome back. So tell us, what are we seeing?
Good morning, Doreen. We are looking at the US dollar index longer term from June of 2011. And what we notice is obviously here on the US dollar index that we are close to so-called area of support, and we have on the top part the S&P 500, and in the recent past, let's say the last 4 or 5 months, we had rising S&P 500 and declining dollars. And now we are very close to this 79 level.
And are we going to break this floor, Bruno?
Well, if we just zoom up a little bit, and we are ending up on the charts with a lot of lines, but basically all these lines are a summary of a pattern in technical analysis which is relatively famous. It's called a wedge pattern. It has a declining slope and a slower declining floor. And you see even in the last 4 weeks that we have a wedge within the wedge. This wedge could move and lead to a rebound, which could be quite important, a few more than 5 to 6%, and that's why we are interested.
Okay, and if activated, what type of impact could this have on the euro?
Of course, it is the mirror image. If it would mean that if the US dollar index is moving up, that probably the euro is moving down. And so far, we noticed that this 138 level is a level which we had put on as a target and as a former ceiling. It's not an absolute ceiling. The next ceiling above that is 142. And therefore, now the question would be, can it go immediately from 138 to 142, or does it stop there while everybody is actually thinking about 142 right now?
Okay, and so what sort of impact could this have on European equities?
Well, quite a lot of an impact. We have again here in green the euro levels, right, to up to 138, and it's rising recently. And we have in dot point up there the relative strength of the European stocks versus the S&P 500. During and since July, or even mid-July, the relative strength of European stocks has been improving versus the S&P 500. At the same time, also, whereas the euro has improved against the dollar, I mean, the dollar was moving down. If the dollar stopped moving down and the euro start to move down as well, okay, that would be a reversal, and that would mean probably European stock are going to be toppy, right? They could be stopping here at 356 or very nearby, because this area of former resistance is in that vicinity. We could check, for example, on a longer term basis. You see that probably I was a little bit too adamant about a correction in the past, because I had been calling for a fall in the fall, and so far only the leaves have been falling. So I had to eat a little bit of my hat.
Yeah, you were wrong. Okay, too bad.
But I hope here we can still not eat the full hat. We have a target area between 30.55 and 30.75, and these are important levels. I really think I'm not going to be wrong all the way. Let's look at longer terms even. If we look longer terms, we have a technical tool. And this tool is the famous cloud that we use from time to time, and we have shown that many times already. This cloud is, the top of the cloud is at 33,100, and we are here about 100 points below that, and it's possible that we go another 50 points up. That cannot be totally excluded. However, if we stay below that, I might not have to eat the whole hat.
Okay.
I might have to eat the whole hat if we break above the clouds, which is what happened in 2006, as we can see here on that part.
Exactly.
It broke above the clouds and then continued for a whole year to move about 700 to 800 points. So here it's a relatively crucial area. Right now, we don't have the full answer and we'll have to come back on that. But the momentum could be in a situation where it goes either way.
Bruno, thank you very much.
You're welcome.
And thank you for watching Dukascopy TV today. Do stay tuned for more Forex analysis, but for now, goodbye.